1. Assets. Assets are resources owned by a company that have economic value and can be used to generate future benefits. Assets are like the treasures buried in a company's backyard. They're the shiny coins and sparkling gems that make the business feel like a pirate's paradise. 2. Liabilities. Liabilities are obligations or debts owed by a company to external parties. They represent claims on a company's assets and can include loans, accounts payable, and bonds. Liabilities are like the monsters under the company's bed. They're the scary creatures lurking in the financial shadows, waiting to jump out and demand payment. 3. Equity. Equity represents the ownership interest in a company, calculated as assets minus liabilities. It represents the shareholders' stake in the company's assets after all liabilities are paid off. Equity is like the stock market roller coaster ride. It's the thrilling ups and downs that keep shareholders on the edge of their seats. 4. Revenue. Revenue is the income earned by a company from its primary business activities, such as sales of goods or services. Revenue is like the jackpot at the end of the rainbow. It's the pot of gold that awaits companies who dare to chase their dreams. 5. Expenses. Expenses are the costs incurred by a company in its normal business operations to generate revenue. Expenses are like the pesky little gremlins that sneak into the company's coffers and steal all the shiny coins. They're the financial vampires that suck the life out of profit. 6. Income statement. An income statement is a financial statement that summarizes a company's revenues and expenses over a specific period, typically a quarter or a year. An income statement is like the company's report card. It's the grade they get for all their hard work and financial wizardry. 7. Balance sheet. A balance sheet is a financial statement that provides a snapshot of a company's financial position at a specific point in time. A balance sheet is like the company's financial selfie. It's the snapshot that captures their assets, liabilities, and equity in one glorious picture. 8. Cash flow statement. A cash flow statement is a financial statement that shows how changes in balance sheet accounts and income affect cash and cash equivalents. A cash flow statement is like the company's financial GPS. It's the map that shows them where all their money is coming from and where it's going. 9. Accounts receivable. Accounts receivable are amounts owed to a company by customers for goods or services delivered on credit. Accounts receivable are like the IOUs that customers write when they promise to pay for goods or services. They're the golden tickets to the company's financial future. 10. Accounts payable. Accounts payable are amounts owed by a company to suppliers or creditors for goods or services received on credit. Accounts payable are like the bills piling up on the company's desk. They're the invoices waiting to be paid by the deadline. 11. Depreciation. Depreciation is the systematic allocation of the cost of a tangible asset over its useful life. It reflects the decrease in value of the asset due to wear and tear, obsolescence, or usage. Depreciation is like the aging process for company assets. They start out shiny and new, but over time, they lose their sparkle and value. 12. Accruals. Accruals are expenses or revenues that have been incurred or earned, but have not yet been recorded in the accounting records. Accruals are like the breadcrumbs left behind by financial transactions. They're the trail of clues that lead accountants to the truth. 13. Generally accepted accounting principles. GAAP is a set of accounting standards, principles, and procedures that govern financial reporting in the United States. GAAP is like the rulebook for financial wizards. It's the magical tome that guides them through the mystical world of accounting. 14. International Financial Reporting Standards. IFRS is a set of accounting standards issued by the International Accounting Standards Board for use in the preparation of financial statements globally. IFRS is like the universal translator for financial statements. It's the language that allows companies from different countries to speak the same financial dialect. 15. Trial balance. A trial balance is a list of all the general ledger accounts and their balances at a specific point in time. A trial balance is like the company's financial tightrope. It's the delicate balancing act that keeps their books in order. 16. Fixed assets. Fixed assets are long-term tangible assets held by a company for use in its operations rather than for sale. Fixed assets are like the company's aging rock stars. They may be past their prime, but they still have value and can generate revenue. 17. Intangible assets. Intangible assets are non-physical assets with economic value, such as patents, trademark, copyrights, and goodwill. They lack physical substance, but provide future economic benefits. Intangible assets are like the ghosts haunting the company's balance sheet. They're the invisible assets that hold value, but can't be touched or seen. 18. Cost of goods sold. Cost of goods sold is the direct costs incurred in producing goods or services sold by a company. It includes the cost of raw materials, labor, and overhead. Cost of goods sold is like the company's grocery bill. It's the cost of ingredients needed to cook up their products. 19. Profit margin. Profit margin is a financial metric that measures the percentage of revenue that exceeds the cost of goods sold and other expenses. It indicates a company's profitability and efficiency in generating profits. Profit margin is like the company's financial sweet spot. It's the icing on the cake that makes all their hard work worth it. 20. Auditor. An auditor is a professional who examines a company's financial records, transactions, and internal controls to ensure accuracy, compliance, and transparency. They provide independent assurance on the reliability of financial information. An auditor is like the financial detective hired to sniff out any funny business in the company's books. They're the Sherlock Holmes of the financial world. Subscribe for more explained videos.